Hey, what's up guys? This is the Smart Money Technician and welcome to today's video, a deep dive into SMT. This video is going to teach you how to choose the correct SMT. Now, if you are a new subscriber or you have not watched the previous video to this video, my suggestion is to pause this video and go and watch the previous video. I will link the previous video to this video so that you can check it out, because the things that I am going to discuss in this video are probably not going to make sense to you. So it is very important that you watch the previous video. Yes, the videos are long, I understand that, but they require a significant amount of time explaining the theory so that you correctly understand the information. So if you're a person that believes that these videos are too long, I'm just going to be very honest and blunt with you. Just click off the video, right? Click off the video. The chances of you ever succeeding in trading is very slim to none. If you believe that you are somehow going to become a full-time trader, you are going to make this a full-time gig for yourself, and it's going to be off the back of some 10-minute video of a trading strategy, you're free to believe what you want. But to those of you that are willing to put in the time that is necessary to listen to the video, to take notes, to go into the charts and look at these things if it was not as I said it is, to those of you, I would expect you guys to succeed in this in the future. So make sure you guys like, comment, and subscribe. We're going to get into the video. So, as usual, we will be recapping the previous things that we spoke about in the video. Again, watch the previous video because we won't be covering everything. But as usual, what we are basically doing is that we are applying the concepts to a framework. So we have external range liquidity to internal range liquidity, right? Where price trades into an external range liquidity. We have some kind of reversal signature in the form of an SMT, a swing formation, a precision swing point at this key level, and we will anticipate that price will go from external range liquidity to internal range liquidity, which is our target. Then what we have is internal range liquidity to external range liquidity. This is when price retraces, right? We get some kind of reversal signature, could be an SMT fill, an SMT, precision swing point, with a swing formation that is indicating that price wants to reverse, and we will then be targeting external range liquidity, right? And then the last one is order pairing ranges. This is when price is in a range and price takes out the range low, gives us a reversal signature as usual, and we will then anticipate that price reverses and trades to the opposite end of the range, right? Order pairing ranges. Then we will be going into SMT as usual. Most of you know what SMT is. This is when one asset takes out a low, right, while the other correlated asset fails to take out that same low, giving SMT divergence, indicating that a reversal wants to take place in the market. And when it comes to SMT, there's also SMT fill. This is when one asset trades into the gap, right, while another asset fails to trade into that gap in a correlated market, and then we will then expect price to also reverse when we see an SMT fill, right? Again, watch the previous video to see greater detail of these things, right? But then finally, when it comes to SMT divergence, we always like to confirm that SMT divergence with a second crack in correlation, or what we call a second stage. So over here, we just have a regular SMT, but that regular SMT can be confirmed with what we call consecutive candle SMT, where in one asset, the previous candle fails to get taken out that low, right? Fails to be taken out, while in another asset, price is taking out that low. So we have a first SMT and then a second SMT that is between consecutive candles, right? And then you can either have an SMT and then a precision swing point confirms that SMT. In other words, over here, it is a up closed candle, a bullish candle, while in another asset, it is a bearish candle, right? So this is a precision swing point confirming the SMT as its second stage. Or, for instance, you can have price trade into a low or even into a gap, but we don't have an SMT with that key level. What happens is that a precision swing point forms, and then the next candle takes out the low of the precision swing point, while in another asset, the next candle fails to take out the low of the precision swing point. So you have a precision swing point with a consecutive candle SMT. That is, again, another form of two-stage, confirming that price wants to reverse at this low. So now we are talking about asset synchronization, right? So asset synchronization is when we study the assets that are in the triad that we are trading and the signatures that they give, indicating strength and weakness, and also helping us to understand whether an SMT is going to work or whether it is not going to work. So this is one of those lessons that you really need to pay attention to, because it will improve your accuracy with SMT. So over here, you can see we have three assets and they are given an SMT, as you can see, right? This one makes a higher low and the other two makes a lower low. The asset that is making the overall higher time frame higher low is the leading asset, and generally it is going to be the first to hit your objective, right? And it is also going to be the closest to your objective, right? While the middle and the lagging asset will be the second and the last to get to that objective. Okay, so remember in the previous slide we talked about a second stage SMT. So this one we're talking about the second stage in the form of a consecutive candle SMT. But this consecutive candle SMT is very special because it comes in the form of a strength switch. So notice over here we have this asset making a failure swing, and then the second stage, which is a consecutive candle SMT, comes here and makes a lower low, right? So here we were making a higher low, but then we switch strength from being strong to being temporarily weak by making a lower low, while the opposite happened over here in the middle and the lagging asset, where here we made a lower low, but then the second stage comes in the form of a higher low, switching strength. And whenever you have a strength switch at the reversal, this is a very high probability reversal signature, right? And generally, when this happens, you know that all three assets are eventually going to reach their objective. So this is very, very important to take note of, because once you understand this, you are going to be able to gauge high probability reversals and know that an objective that is currently in play is probably going to be hit on all three assets in the triad that you are trading. Generally, you want to trade the asset that is making the overall higher time frame higher low, right? Because it's going to be the closest to your objective and it's going to be the most likely to hit your objective. However, we are going to show you in this video when you can trade the middle or lagging asset as well, right? Because there's different context to this, and we will be sharing that in this video. So over here, this is another variation where it is a strength switch PSP. So notice over here in the leading asset, we make a failure swing by failing to take out that low, right? And then we form a precision swing point. But this precision swing point is a strength switch precision swing point, because over here, right, we are failing to take out that low, but then we print a bearish candle precision swing point. While over here, we did take out that low by trading lower, but we print a bullish candle precision swing point. This one over here, if we are trading lower to take out that low, we should be printing bearish, but we're not printing bearish. We gain strength by then closing it as a bullish candle, while this one that failed to take out that low, which should be printing the bullish candle, but it's actually printing a bearish candle. Are you seeing that? It's failing to take out that low. It's showing strength, but instead of it printing a bullish candle by showing the strength that it has, it then changes into the weaker asset and prints a bearish candle, while this asset and this one over here that were trading lower, showing weakness, taking that low, gain strength and print a bullish candle. This is a strength switch precision swing point. It is very, very powerful signature to see at your reversal. And generally, when you see that, you can expect all assets to eventually reach the objective that you are envisioning within the market. All right, so the next variation is when it comes as a second stage SMT. So what happens is that you have your first SMT, right? But at the first SMT, price does not reverse, but rather goes into a consolidation, right? So whenever price goes into a consolidation, we will demand one more run through below the low of the consolidation so that price can then reverse. And that comes as a second stage SMT. And what is special about this second stage SMT is that it comes as a strength switch, right? So you can see over here, we made a higher low, and then the next one comes as a lower low, while here we made a lower low, but then the second stage comes as a higher low, switching strength. So it was weaker over here, but then gained strength over here to be able to reach these highs over here, right? So whenever you get a strength switch at the reversal, you can expect it to reach the high. However, you still always want to be trading the one that is making the overall higher time frame SMT, right? So ultimately, what this boils down to is helping us to filter out SMTs, right? So generally, we know that we are going to have a leading asset, the asset that is the first to reach the objective, while the middle and lagging asset are going to be the second and the third to get to that objective, right? So the middle asset is the asset that is the second closest to the objective, while the lagging asset is the furthest away from the objective. So whenever we get a true reversal in the market, the leading asset hits the objective first. And when that happens, that is always going to form an SMT at the opposite end of the range. So the question is this SMT that is forming over here going to cause price to reverse? Because every single time there is going to be an SMT. This is why a lot of people like to say that there's always SMT in the market, and SMT doesn't work because they don't understand how to filter out SMT. So one technique that we use to be able to filter out SMT is, if you see that you have like a strength switch at the reversal, right? And all assets, you don't even need a strength switch, right? If you have a SMT, right, and you see all assets expanding after the SMT, expanding at the reversal, and as price is expanding and the leading asset hits the high, right? If all of them are all expanding, generally all of them are eventually going to hit that high. So basically, you don't want to see this one trading higher to reach that objective while this one is consolidating or retracing, this one consolidating or retracing, right? Then you know that, okay, that S&P is probably going to cause price to reverse if that was the case. But if all of them are expanding at the reversal, generally all of them are going to hit that objective, and this SMT, you would ignore it, anticipating that it is just a situation where the leading asset was the first and the other ones are going to follow suit. So the technique that we use to be able to anticipate whether the SMT is going to work or fail is the advanced premium and discount. So over here you can see we have the SMT, right? This two-stage SMT taking place, which is a true reversal, and then price then trades to the objective. So what you want to do is you take your fib or whatever tool you're using from the low all the way to the high of the objective that the leading asset has taken out, and you do the same thing for the middle and the lagging asset, right? You take it from the low of the reversal to the high of the objective, right? You do that for the middle and the lagging asset, and at the time that price on this candle where price takes out the objective, you want to look at that candle where it is in the advanced premium and discount sequence. If on the middle and the lagging asset price is in the premium end of the range, you can then assume that price on the middle and the lagging asset are eventually going to also get to that high, because number one, they were all reversing, and they were all expanding at the reversal. As you can see, price expands towards that level, and all three of them are expanding. This one reaches the high, and as it was expanding on this candle, which is the candle over here that reached it high, right? It is in premium over here. Here it is also in premium. You then assume that this SMT is probably going to fail, and price is eventually going to get to that high on the lagging and middle asset as well, especially if there's a strength switch at the reversal. You already know that this is going to be the case. This is how you are going to anticipate an SMT break. You are going to anticipate that price will break the SMT that is forming over here, right? This is how you will validate a continuation in the market, and you know that a reversal over here is highly unlikely, right? Whereby over here you can see that the leading asset gets to that high over here, but the middle and the lagging asset is in EQ of the range or is in discount of the range, right? You can then assume that this is likely a continuation in a validation, because you can see as price expanded to that key level in the leading asset, the middle asset over here was retracing into a gap. This one was consolidating, and as the leading asset got to the objective, the middle and the lagging asset were in EQ, equilibrium, or discount of the range. You know that a continuation in the market for price in the middle and the lagging asset to get to that high is probably not going to be the case. And in such scenario, you should probably just close your trade whenever you see something like this. So whenever you have ascertained that at the reversal on the middle and the lagging asset, all three assets were expanding at the reversal, and then the leading asset traded into the high while the middle and lagging asset has not yet gotten into that high, but because they all expanded at the reversal and they are at EQ or premium of the range, right? You can then assume that price is eventually going to also get to that high over there on the middle and the lagging asset. And a way that you get, or the way that you get on board this type of moves, is using a strength switch. So this is what I personally call catch up strength switch. This is when the leading asset gets to that high first, but the middle and lagging asset need to get to that high as well. So you will see a strength switch. So over here you can see we have a gap. This asset in the middle, or the lagging asset, becomes the stronger asset by failing to get into that gap, while the leading asset changes into the weaker asset by actually trading into that gap. And they do this so that this one can gain strength to catch up to that high, breaking the SMT, right? So this is a catch-up SMT, and you are anticipating that price is going to break the SMT that was formed over here because of what we have ascertained at the reversal. Or for instance, right, the leading asset eventually reaches the high first, the middle and lagging asset have not, but we have seen that they have all been expanding at the reversal, right? And the middle and lagging asset are at EQ and premium of the range, so we assume that they will also get to that high as well. Another way to get on board with this is with a strength switch PSP. So over here, this asset, they both trade into the gap, but then this one forms a bearish candle as its precision swing point. Even though it's supposed to be the stronger asset, it changes into the weaker asset by forming a bearish candle, whilst the other one in the middle, or the lagging asset, trade into that gap, forming a bullish candle as its precision swing point to gain strength to get to that high and break the SMT. So again, another variation is that we can see the leading asset hits that high first, and we have ascertained that the middle and lagging asset were also expanding at the reversal, right? And they are at EQ and premium of the range, so we assume that they too will reach this high over here first. So what happens is that when price reaches that high, it consolidates, takes out the low of the consolidation in the leading asset, changing into the weaker asset, while the middle or lagging asset failed to take out that low, turning to the stronger asset, gaining strength to get to that high to break the SMT. So the second technique that we really use, especially when anticipating that an SMT will fail, is that we study the leading asset. One thing that we can see is that whenever the leading asset still has another draw on liquidity to the left that it has reason to get to, then you know that it is still going to expand to that level. So you can then assume that the middle and the lagging asset are probably also going to continue expanding, getting to this high as well, while giving the leading asset a chance to also expand to that close proximity draw on liquidity that is to the left, right? And generally, whenever the leading asset still has a reason to continue higher, you don't even need to say strength switch when price takes out this high. Are you understanding? So it can be a regular SMT that signals that, or a regular Kraken correlation that signals a continuation to get to the next draw on liquidity. If it is a strength switch, that's even better. But whenever you still have a reason for the leading asset to continue, that is a close proximity draw on liquidity that the leading asset has not yet gotten to, you generally don't even need to say strength switch to get on board the move, right? And you can even, in this scenario, trade the leading asset, while in the other scenarios, right, for here, right, you would probably want to trade the middle or lagging asset to get to that high. So if you traded here, right, and you saw price got to this high, right, and then let's say the next session, right, you start to see price consolidate, and then you see a strength switch, you can now trade the middle or lagging asset to get to that high that the leading asset has already gotten to, right? So you could take your second trade over there on the middle or lagging asset. Same scenario when it comes to here, right? You have this drawn liquidity that is very close proximity, right? And you assume that the middle and lagging asset are probably going to get there. You can trade the middle or the lagging asset in these scenarios over here, right, to get to that high to break the SMT, right? So what you need to do is to pay attention to what happens on the leading asset whenever you have an SMT. So as you can see, we had a true reversal at the bottom of the range, and then price expands towards this high, right, on the leading asset. So we will watch out for one of three failure to manipulate signatures, right? So for instance, over here, price will then trade to that high, but then it will displace past that high. And that is a signature that indicates to you that price is not wanting to reverse at this high. So on the lower time frame, what you're going to see is that price will retrace on the lower time frame, right, and then give a change in the state of delivery. So you can see these two consecutive down candles right here. Price then closes above those two consecutive down close candles at this high. So for instance, if you watch the previous video, you know the time frame alignment that I've given. So this could be like a 4-hour high that price has traded to. But perhaps on the 1 hour or the 30-minute or the 15-minute, you see price giving a bullish change in the state of delivery at that high. That tells you that this is not going to be bearish, because why are we getting a bullish change in the state of delivery at this high? Doesn't make any sense, does it, right? So you watch out for something like that. If you see that happening, that is a indicator that price does not want to reverse at this high. Or for instance, right, price gets to the high on the leading asset, but then starts to consolidate at that high after reaching the high. Again, if those of you have watched ICT's core content in month 1, where he talks about the phases of price, you would know that price expands, then it consolidates. When price is in a consolidation, and let's mechanically describe this. So you can see, for instance, right, price got to this high. You saw SMT. You thought, okay, maybe price wants to reverse, because you see how price takes the previous candle's high out. It closes back into the range. So this looks like a C2 closure on this candle right here. But then the next candle does not give a C3 expansion candle, but closes as a bullish candle, or it even just stays inside the range of this previous candle. That is a mechanical way of describing what a consolidation would look like, right? So you can see that price is now consolidating at that high. And if you know about phases of price, price cannot go from a consolidation into a reversal. In other words, price had previously expanded upwards and then it starts consolidating. It makes no sense for the algorithm to then reverse, go in the contrary direction that it previously was expanding into. It would at least, at the bare minimum, first have to take this high first out before it would reverse, right? Because price does not consolidate then reverse. It will first consolidate, then expand, which would be a manipulation, and then it can reverse. So when you see price coming over here and taking out this low over here, and it kept that high intact, you already know that this move here is a fake move, because you don't want to see price go from a consolidation to a reversal, okay? So when price takes the low out, you already know that is a continuation signature, and you would look for a cracking correlation to continue the trend. Or for instance, price, after the true reversal, we expand in the leading asset, hitting the objective, and you just start to see that price starts to stall at that level and retrace, right? So you can see over here, this candle takes out the high. This next candle doesn't even take out that high, but it comes and takes out this low. So it kind of looks like a C3 closure. But then the next candle does not even expand, right? It prints a bullish candle again inside the range, and then it takes out the low again. So you can see how price is just drifting lower slowly, but it's not doing it in the expansive fashion that we would like to see price do it. So that immediately tells you that this is a retracement that is taking place on the charts, right? And we know that price does not reverse after a retracement, right? So this already is telling you that price wants to continue, right? A very, very, very important thing that you want to see is that when price gets into the key level, it needs to give a V shape, right? So it needs to expand into the level and expand away. You don't want to see it consolidate or retrace at the level. That is not a true reversal signature taking place. Are you understanding? So just as price traded low into this level, because in the other asset, it's obviously taken out the low, it expands into the level, it expands away like this. This is what you want to see for a reversal, not this, and certainly not this as well, right? These are failure to manipulate signatures. And if you master this, your accuracy with SMT will literally increase. So pay attention to these things and you can avoid the losing SMT. It's kind of like those situations where you have a trade. Let's say you did enter on this, but then price just starts to stall. And now you're hoping that price expands in your direction. If price is doing these things at your reversal, just close the trade because it's probably going to fail. We want price to do it in a very quick fashion. None of these, okay? Again, so this is a situation where the leading asset still has a reason to continue. And in such situations, we don't really need to see a strength switch take place. So this is a displacement taking place at that short-term high. There's still a reason to move on the leading asset, right? And you can see on the lower time frame, price does what? It retraces and then gives a change in the state of delivery on the lower time frame. That is a failure to manipulate signature. That indicates to us that price is probably going to continue past this high, getting to this close proximity draw on liquidity. And you would obviously trade the lagging asset. And like I said, in this situation, you don't need to see a strength switch. If you do, very good. But if you don't need one, right? You can see price gets into this gap over here, forms a precision swing point. You can trade the next candle, get into this high right here to break the SMT that was currently in play. So as you can see over here, right, price does not get to that high. It did get to the high precision swing point, right? We've ascertained that all assets have expanded at the reversal. It's even giving a failure to manipulate signature, as you can see over here on the leading asset, right? You then say that, okay, on the lagging asset, I will continue the trend. Or, for instance, the leading asset reaches the short-term high, right? It starts consolidating, and you see to the left there is still a high on the leading asset. In such scenarios, you can decide to trade the leading asset to that next objective, but also at the same time, you can trade the middle or the lagging asset to the high to break the SMT because it's closest to this high. So it's probably going to break the SMT and get to this high as well. So over here, you can see that when price consolidates on the leading asset after getting into the short-term high that gave a SMT, right? We know that this SMT is a fake SMT, not only because there's a reason to continue, but also because all assets were expanding at the reversal, and then price, when reaching the objective, gave a failure to manipulate signature in the form of a consolidation, right? So when we get this consolidation, price manipulates the low of the consolidation, but in the other asset, it fails to take it out there, right? Telling you that price is probably going to get to this high, breaking the SMT. Again, this happens in the form of a strength switch, but it doesn't even have to be a strength switch in this scenario when the leading asset still has a close proximity draw on liquidity. So that is how you would trade it if it was a consolidation, a failure to manipulate signature. Or finally, you can see the leading asset reaches this objective. It still has a reason to continue, right? And we've ascertained that all three assets in the triad were all expanding at the reversal, even on the middle and the lagging asset, right? But the leading asset was the first to reach this objective, and we see that they all expanded at the reversal. The middle and the lagging assets are in EQ and premium of the range if you take from the low of the reversal to the high of the objective that the leading asset has already taken out. If you see that price is also at the premium end of the range, and you are getting a failure to manipulate signature in the form of a consolidation. So you can see over here, price is dragging down slowly. It's not giving the V shape like here, right? Here it would be V shaping to the downside if it was a true reversal. But you can see that here it's just stalling slowly after getting to that high, but taking out the low in a very lethargic manner. That already is an indicator that this is a retracement and not a true reversal, right? With all these things in mind, we know that this is going to be a continuation signature, and the retracement that is taking place is capped off when a precision swing point forms, right? So again, because the leading asset still has a reason to continue, it doesn't really need to be a strength switch, right? So you can see a precision swing point forms there, and you can trade either one because this one still has a reason to get to that high, and this one also is probably going to break the SMT. So you can trade the middle or lagging asset. You can even trade the leading asset. In such scenarios, it doesn't really matter, right? So this is the failure to manipulate signature in the form of a retracement. And when you see this, you will anticipate that the SMT is probably going to break. Master this, folks. Go back to all the SMTs you've traded, and the ones that you saw that failed, they probably had one of these things. And if you are able to identify these things in real time, you will be able to avoid the SMTs that are going to lose, right? So keep this in mind. All right, so now we are on the charts, right? And we are on the oil triad, right? So HO, CL, and RB. Now, in seeing this, right, we can see that we have an SMT that has currently taken place where this candle takes out the low and the other two assets fail to take out the low, right? So you can see that as price takes out the low, making the lower low, instead of it printing a bearish candle as its precision swing point, it then switches strength to print a bullish candle. So we have a two-stage SMT plus a precision swing point, but the precision swing point is a strength switch PSP because it closes as a bullish candle on the asset that is weaker, while on the stronger asset, the one that is making the higher time frame, higher low SMT, then prints a bearish candle as its second stage PSP. Can you see that? So coming into the next day, we can see that there is a gap above the market, right? We can also see that it is a C2 closure, which is good. So we would expect the next candle to be a C3 expansion, and we would be going from external range liquidity to the internal range liquidity, which is this near-term gap that is there for us to trade back into. So as you can see, that is an example of a strength switch. So we're combining the framework, right, of the candle closures, the framework when it comes to internal to external, external to internal, or order pair ranges, and we are also using SMT with it as well, right? So you can see how price gives a strength switch, and the next day it's a very high probability that price is probably going to go trade back into that gap. So on the 4-hour time frame on that day, you would be coming into the trading day being bullish because of what you saw on the high time frame, and you can see over here we get a signature. Like, you can go and watch the previous video that I've done on how to enter and all that, because I've really covered that extensively. Right here, I'm just showing you the strength switch that is taking place and how it can help you. So this day you would be bullish to trade back into the internal range liquidity, which is the higher time frame fair value gap. Right now, even that same day intraday, we got an intraday strength switch. So you can see we went from the 4 hour, now we're on the 1 hour time frame, and you can see the SMT that takes place right here. Right, you can see it made a higher low, and then we get a second stage as a consecutive candle SMT, where the next candle is the next stage is a strength switch, because here it made a higher low, now it's making a lower low. So it was the stronger asset, and then it turns into the temporal weaker asset, while this other one switched strength as well, where the middle asset that made the lower low on the second stage makes a higher low. Right here we made a higher low, right, but then the next consecutive candle SMT is a lower low, is a strength switch, and you can see how price just expands into the higher time frame level. So these are things that you need to pay attention in price, because they're extremely very high probability, right, and they can really help you to be able to anticipate price movements that are taking place in the market. So as you are trading, right, you just need to mark charts and be paying attention to these things until they become second nature in spotting them, so that you can be able to be capitalizing off these kinds of moves. Alright, so now I want to show you guys another example. This is on the index futures triad, right? So you can obviously see that here we have a strength switch SMT at the lows, right? Here we made a higher low, and then we get consecutive candle, sequential SMT, showing a lower low on the second stage. And the lower low over here, since it is the opposite of this one with the higher low, it is a strength switch, right? So here, lower low, higher low, the second stage is a strength switch, right? But what I want to show you is the situation when you would anticipate that the SMT is going to break. In other words, a strength switch catch up, right, to break the SMT. So we can see over here, right, on these assets, right, we got the reversal taking place, right, and then we reach this high right here, right. So what happens, if you look very closely, these two assets got to the high first, right? So in this case, I would say NQ and ES were really leading, whilst Dow Jones was not at that high. But you can see that price did give a expansion at the reversals, and the reversal was even a strength switch as well. So when you see that price over here, right, first trades into this low, right, and then the next SMT is also higher low, you can see that that is a strength switch taking place, a strength switch reversal. But then price expands further on, getting very close to the high, right? And you can see now that we're very close to the high. We've damn near formed equal highs. You already know that it's probably going to take out the high, and the indication that it's going to take out that high is when you get this strength switch SMT. So you can see over here on these other assets, this low right here is a gap, right? You can see a gap right there. Price trades into the gap on that asset, price trade into the gap on this asset as well. But on this one that did not yet reach the high, it fails to take out that low, which would be a gap. So you don't have to have a gap on all three assets, just one of the assets has to be a gap for you to still say it is an SMT fill. So in this case, it did a strength switch SMT fill to break the SMT that is taking place here, right? So as you can see, this candle fails to take out that low, to catch up and break the SMT, and that is how you would be able to capitalize off this move. So you would, when you see this asset failing, let me even show you how you would enter, right? To those of you who are curious, right? For instance, this is the 15-minute. When it's the 15-minute, I like to use the 1 minute, to be honest, right? So you can see when we get that SMT, right, and then we get a change in the state of delivery here, right, as this candle closes above these consecutive down close candles. After price closes there, that is really where you would enter, right? So the buy there as price, and you can put your stop perhaps at EQ of this long wick just to catch up to that SMT. Now sometimes it's not going to be that much of a risk reward, but it is one of the super obvious trades that you can take to catch something very quickly. Like in such a scenario, I would try to demand maybe a deeper retracement, right, and perhaps I would put my stop maybe just above the bodies, because I can see that price is very close to that high. It's probably going to be in a rush to get there, and perhaps that way you can try to finesse the risk reward to at least get maybe at least more than 1:2 just quickly to that high, right? Because you know that there's a strength switch for price to break the SMT that was taking place on the higher time frame as well, right? So in this case, I would trade the lagging asset to break the SMT. All right, so we are on the silver triad, and we're not going to be going too deep into narrative and bias, right? But you can see that price gap down, right? And it took out this relevant low that is there, right? What is a relevant low? A relevant low is a low that is spaced out to the previous low from it. So where would be the next low before this low? It will probably be that low right there. Can you see the space between these two lows, right? You want your SMTs to take place at relevant lows. Like you don't want it to, for instance, can you see this high right here, right? You don't want price to give you an SMT with that high and leave this high here intact, because then you would have like equal high SMT. So that this low, I mean this high right here, is what we would call a failure swing, because how close it is to the previous high that is next to it, right? You don't want to see SMT with failure swings. You want your SMTs to be with relevant swings in the marketplace, or even to say precision swing point with a relevant swing. So over here, when price comes and takes out that low, right? That low is a relevant swing, so we can expect some kind of reversal to take place there. So when that happens, I believe there was a high time frame precision swing point. Even here you can see after taking out that low, price comes a precision swing point at that low, and then it starts to expand. What you will notice very closely if you look over here, right, when this day began, is that the next candle over here takes out the high, right? So at that moment between this high right here and this candle that begins the day, there is an SMT taking place, right? So this asset over here would be the leading asset, right? So if you look on the lower time frame, so for instance, this is the 1 hour time frame, right? If I go to the 5-minute time frame, I want you to pay attention when price is taking out the high, right? Can you see how it forms consecutive down close candle and then closes through them, right? That would be a failure to manipulate signature at that high, right? So that would tell you that probably the lagging asset that has not yet gotten to that high is probably going to get to that high as well, right? So let me go back to the 1 hour time frame. Again, you need to watch the video that I've done previously, which I will link, so that you know the time frame alignment and all that, right? So that all this will make sense. So you can see that this asset switches strength because it has not yet gotten to that high, right? So it makes a higher low SMT, while this one, which is gold, which has gotten to that high already, makes a lower low, right? So that this one can catch up to that high. Can you see that? So this would be a catch-up SMT as well to break the SMT that was in place. Always pay attention to what the current high of day is relative to each asset in the triad that you are trading, right? So here we have new high of days currently taking place constantly, while in silver the high of day was still there. So when you see the strength switch SMT, you already have your trigger to get price to break the SMT so that it can reach that high, and you can get on board this type of trades as well, right? So you probably trade the SMT that was in there, and you'd probably just target the high that is there so that the SMT can be broken. Alrighty, so now we are going to put everything together, right? I just want to show you how you would apply everything whenever you are gauging your SMT. So we are on the oil triad again. You can see that we have an SMT, right? And then we have a second stage that is in the form of a strength switch. So here we were stronger, and then we turn weaker on the second stage, right? So weaker, right, making a lower low, and then it switches to it being stronger on the second stage. That is your strength switch. In fact, we even have a precision swing point. The precision swing point was not really a strength switch, but the second stage SMT is, right? So as you can see on the leading assets, which would be RB over here, we get to that high and we expand. Did all three assets expand at the reversal before RB eventually got to that high? Yes, right? So you can see, so when price gets here, and you can see that RB is the first one to get there, you can see that the next candle is probably also going to get to that high as well, right? Because it's so close to the high. So if I take from the high, which is the objective that I'm gauging, all the way to the reversal low right there, notice how price is deep in premium. It's really at that 75% level. This is how you know that the next day price is probably gonna trade into these highs there, right? Because those are close proximity SMTs that are there. So we can see that RB is the leading asset, while CL and HO are the lagging asset. In fact, HO is really the one that is really lagging, because CL is a bit closer to these highs, so CL will probably get into the high. So CL is like a middle asset, while this one is the lagging asset. So knowing that we'll probably continue because of how close the draw on liquidity is, the fact that we expand on all three assets at the reversal, right? I want to show you guys something, right? So this next day, right, we would probably be bullish, right? And let me show you something. So what you would do is you would take your GAN box, right, to trade the next day, and you want to see price reject at the upper range, right? So I'll also do the same thing here, right? And this next day we want to see it respect the upper range, right? So you go to the 4 hour because we're going from the daily, right? The next time frame would be the 4 hour. I want to show you guys something. So in fact, let me go to the 6 hour actually, because that is where the price signature took place, right? Waiting for it to load up, right? So you can see we have our refined key level, a gap that is in the upper half. Notice that HO, which was really the one that was lagging, we trade into the gap on all three assets, right? But it prints a bullish precision swing point, while this one that did get to the high printed a bearish. So the lagging and the leading asset, there's a strength switch, and this is how the New York session you would have seen a bullish expansion for the New York session, right? Possibly just to target one of these highs that are just there, right? Unfortunately, what then happens, it then retraces again, which, you know, sometimes you can't really see these things happening, but the thing is still in play, right? The anticipation, the analysis is currently still in place. So if you look at the leading asset, right, you can see that the leading asset has this high right there. That is, in fact, even the middle asset still has these highs that are there, right? So you can then assume that this SMT is going to break, because first of all, you can see that we have this high, right, that price is very close to, and we expanded at the reversal, right? And now a lot of you would probably think that we have an SMT that is taking place, right? So most people would assume that that is what is going on, that this is an SMT and then a precision swing point is confirming it. But the fact that at the reversal we had a strength switch and all assets expanded at the reversal before the leading asset eventually took out that high, and then if you take your fib, right, from that high to the low of the reversal, right, you will see that we are in the premium of the range prior to the expansion into that level on the leading asset. This over here even touches the 75% level, so it's really creating equal highs. So you can even see over here that we trade so deep and we don't even take out this swing high, leaving like equal highs there. If you see something like that, you already know that this is likely fake and you don't want to trust this. So the next day, you know that the asset has reason to still continue to the upside, right? Even especially on the leading asset, we still have this clean highs there, that high there, right? The leading asset still has reason to go higher. We have equal highs above the marketplace, right? When you see this precision swing point, but you see that right under the precision swing point is a gap, right? You already know that that gap is probably going to be used to support price higher. So you can see, let me just take this out of the way. Here, we had price trading into the gap, and then there, price not trading into the gap here, price not trading into the gap there as well, right? You know, and some of you will say, but this is not a strength switch because this one is the lagging asset and it's making a lower low. Sometimes they like to hide it from you, right? So I want to show you guys something on the lower time frame. So going from the daily to the 4-hour time frame, right? With that SMT that we see taking place, can you see? Well, the lagging asset making the lower low, but what confirms it? A precision swing point. And what is that precision swing point? It's a strength switch precision swing point, because the precision swing point on the asset that is making the lower low, instead of it printing a bearish candle as its precision swing point, it prints a bullish candle. It switches strength to confirm this SMT. So on here, this would be a strength switch reversal, right? A reversal at, a strength switch at the reversal, but it is doing this so that it can eventually catch up to the highs of the SMT that was taking place, right, to break. So as you can see, strength switch, and what does price do? It expands, breaking that SMT that was with that high, right? Is this making sense, guys? So this strength switch stuff is extremely powerful. I could show you tons and tons and tons of examples, because it's almost at every reversal. It's always there, right? When you see it, you already know that it is high probability. The key is to filter price. And I want you to notice this, right? We went from the daily to the 4-hour, right? What did price do when it got to this high, right? When we trade to this high, did we start to V-shape away from it, or did we consolidate at it, right? Failure to manipulate signature. And that failure to manipulate signature is being capped off by an SMT. So price consolidates here. We get an SMT at the low of the range, which is a strength switch when you see this precision swing point print to break the SMT. So all these things are things that you need to be paying attention to in price. They will help you know when an SMT is not going to work and to trade contrary to it. All right, very, very powerful stuff, guys. Go into the charts and backtest this. Make this your focus, because if you can focus on just improving this, your win rate will tremendously increase. Because you will know that yes, there is always SMT in the charts, but there are times where I will trade against the SMT, and there's times that I will know when the SMT is probably going to work and when it is going to fail, and I will avoid the times it's going to fail. In fact, I will even trade against the time that it's going to fail. Guys, make sure you guys like, comment, and subscribe to the channel, right? It does take me time to come up with this annotations and drawings to try to illustrate the stuff. Shout out to T-Trades, shout out to GXT, shout out to Trader Day for the information, because these are the people that mentored me. The information that I am trading is derived from them, so I always want to give them credit. Make sure you guys like, comment, and subscribe, and we will talk in future. Peace.